morning, everybody. Happy Thursday. Beautiful Thursday. April. What April? May 8th, 2025. Spencer Israel, Steve Strazza. JC apparently told me last week he was going to be out this Thursday and Friday. I can't confirm or deny that because I don't remember him telling me, but he could have told me, and I just forgot. I don't know. So my bad. Oops. Doesn't matter though. We got a good show for you today. We got John Kolovos on today. We got Kenny Glick on today. We got Sean McLaughlin on today. A lot to talk about. I want to talk about Alphabet. You don't get days like that very often in the stock like Alphabet. I want to talk about Shopify. I want to talk about maybe ARM, maybe some Peloton. We got some DoorDash earnings. If Steve wants to, we can talk about the Fed. It was, we knew they wouldn't do anything. It's not about what they did. It's about what they said. A lot of what they said was like, we'll wait and see. So I don't know. We'll see. That's the plan. What up, chat? We got Michael Noss in the house. We got Colin. We got Channel Guy, Jonathan Harminder. Mary's here. Good morning, everybody. Let's go. I'm going to bring Steve on now. I hope he's done with his Egg McMuffin. If he's not, we're going to find out. How about that? Wrong video. Let's try that again.
Good morning.
Hey, what's up? How about them Knicks, huh?
What a game. Are you going to give them some credit now?
I mean, I have no complaints. I have no feedback. I have nothing. I have nothing but good vibes.
I mean, they could win this thing. I've been saying that.
I have not been saying that. We'll find out more in a couple of days. But
why are you so bearish? Why are you so bearish? Just this what just from being a Knicks fan kind of thing?
25, 26 years of being a Knicks fan. My fanhood began I caught the tail end of their relevancy in the 90s. I caught the very end of that. So my life has been a series of disappointments from a Knicks point of view. So
I was there. Say no more. Harminder's right though, and this is a big deal. Crypto flags are resolving higher.
Oh,
yeah, we had some action last night.
Did we?
Yeah, a little bit of action.
All right, let's talk about it. I honestly don't know what's going on in crypto land. Let's see. It's a green day so far on Wall Street, with the exception of gold. Right? Anything else down today?
I'm lagging here. I'm trying to pull up my list.
Is any gold's down 1%? Is any other market, at least on my screen, nothing besides gold and the VIX is down? Futures are all up. Dollars up. International looking good.
Well, we talked about this, didn't we? There's going to be a big announcement.
Oh, are you referring to the trade deal with our friends across the pond?
Yep.
Yeah, yep. That's apparently a thing now.
Mm-hmm. The market, it's had a relentless bid off of the lows, and the tape has been dominated by the buyers, like day in and day out. And there have been reasons to sell it off. And if you think about it, we've had nothing good for a couple of weeks now, right? But the market's not sinking on any headlines. So
we've had nothing bad either, have we?
Bad was that it stayed the same.
Yeah, but the bad headline came a month ago, right? So nothing's happened since then. It's been a series of fake outs and shakeouts, right? No, from a headline point of view, I'm saying
100% of the damage from whatever day has now been repaired.
100%? Is that so?
Yeah, we're back.
I don't think I realized that. Yeah, so, you're right.
So eventually, there's only one direction to go, and that's up. And now if you do start to get some positive headlines, right, and some actual catalyst, I mean, they're going to send this thing higher. And I think that the U.S. indexes are going to look a lot more like Europe soon. So what's going on this morning? S&P 500 futures up about 1%. Dow futures up about 0.8%. NASDAQ futures up 1.25%. Spencer, everybody ripping higher today in the NASDAQ except for Google. Google's even popping 2.6%. Clawing back some of those losses from yesterday. Google closed down lower by 7.25%. Over in Bitcoin is up 2.4% today, trading just below 100,000. Spencer, we're at 99,369 in Bitcoin. Solana also resolving a bull flag, or trying to. Really right there, big level for Solana, trading around 155, up 5% today.
Shout out Ethereum. Let's shout it out.
Up 8%, also definitely resolving a flag. And I'm going to check the Ripple too, because that one's just been so good. Ripple popping a little bit here.
3%. Not bad.
Yeah. Crude oil has been on the ropes, but it's really dug in and held where it needed to since last week. Right, crude oil holding those pivot lows, has a bullish momentum divergence in place, up 2.25% here today. I think that's important. Crude finding a little bottom here and bouncing, maybe undoing this top. Copper, nothing, down 0.3% today. Gold, like you said, Spencer, down as well. So not a good day for the metals. Silver, flat for the most part. And then as for interest rates, U.S. 10-year yield down to 4.3% here this morning. So not much movement with bonds today either.
Thank you, Chris with the beard, for letting me know that the total crypto market cap is now back above, we should say, $3 trillion.
So Forex and fixed income, really sleepy out here, which is interesting because we just had an FOMC announcement yesterday, and you didn't really get any action then, and you're not getting any, big move today either. So what a nothing burger yesterday's Fed was. Did you listen?
No, I haven't. I haven't tuned in live. I haven't tuned in.
You're the one who schedules the meetings every time Powell speaks, aren't you?
I haven't tuned in live for a few meetings now. I like most people, I just kind of look for the highlights after the fact, especially when I'll tune in live if there's going to be a policy change, right? If they're going to do something. If they're not going to do anything, then I'm not as inclined to attend, right?
I think going into yesterday, the market was pricing in something like a 96 or 97% chance of nothing.
Yeah. Which is what happened. So
not a real shocker. And then let's talk about it. Google, what do you think? I heard some good analogies about this.
So if you missed the headline from yesterday, it came as part of this antitrust trial, right? That the DOJ is pursuing against Alphabet. So Eddie Q, who's Apple's senior VP of services, was, I guess, testifying. He said that
he's like one of the guys over there.
Apparently, he said last month, Apple searches on Apple Safari, that's their browser for the uninitiated, declined for the first time ever. That's what he said. Right. And then he said that they are looking at integrating some new AI tools. First off, he blamed AI for that, which obviously seems reasonable. And then he said they're going to be thinking about integrating some new AI tools that would make Apple less reliant on Google search, right? So
makes sense.
It makes total sense, which is why this is the first thing that came to everyone's mind a year or two ago when the AI thing took off was, wait a minute, this is better than a Google search? Why do I need Google?
ChatGPT is stealing Google's business. And Google hasn't had a competitor in search 20 years. Since the early 2000s, Google has not had a real competitor in search.
Yeah, probably about 20 years, right? I think is the last time you could say like a
Yahoo and MSN back in the day.
Anyone still use Ask Jeeves? Is that just me? That might just be me.
Isn't it questions.com or answers.com now?
Yeah, that was 4 iterations ago. I have no idea what it is now.
So I've heard some good takes on this. on the Josh was talking about it with somebody. It's like when Disney lost ESPN. This was their cash cow, their go-to, keeps the lights on, right? I don't know what percentage of sales search is right now. It's about 70%, 75%, I believe. Google's ad revenue, 73% of Google's ad revenue came from search. Yeah. So a very significant amount of their revenue, the majority of the company's revenue, comes from this business, and they've never had a competitor. So it's not that Google like goes away now. They do a million other things,
Right.
But losing that cash cow, that little ATM that fuels and funds all their other ventures. Company
it's not a bad analogy. What do you do when your cash cow becomes unreliable, or right, which happened to Disney, and is you take it for granted if the economics of the business work a certain way, and then those economics change all of a sudden, or technology changes all of a sudden, right? I'm down with that analogy. So yeah, what do you do in Google's case? Obviously, that, like you said, I mean, Google's doing they're not doing nothing. They have their own AI things, right? They have their own models. They have a million other balls in the air, right? But in terms of revenue, this is their bread and butter. So
imagine if Apple had competition for the iPhone.
That's sort of the other analogy where iPhone, and to Apple's credit, they've diversified a little bit in the last few years, but iPhone is the cash cow. He said, this Eddie Q guy, didn't he say something? I thought I saw him making a comment about how in 10 years you won't even need an iPhone, which scared the crap out of me, because I think that means like an implant in my brain. I don't know how I feel about that yet, but
it's going to be glasses, I hope.
Maybe
glasses and a watch. I don't know. All right. Here's another take on this. This is not new news. I think you buy this. Google is by far the cheapest of the Mag 7s. I think it trades below 20 earnings, 20 times forward earnings now. Maybe, Spencer, this is priced in, and this is why Google is so much cheaper than its peers.
It's cheaper on what, like a P basis? Price to sales basis?
Price to earnings too. If my computer wasn't frozen, I would tell you exactly what their PE is. Last time I checked, it was high teens.
Yeah, I'll tell you right now. Mine's working a little faster. Not that much faster, apparently.
I can't
PE, forward PE of 16. Price to sales of 5.
What's the PE on Mags? Check the PE on Mags wherever you are. Just for a comp.
Higher?
Should be. Just for a comp.
30? 28?
There you go.
Yeah.
So Google trades at almost half the valuation of its peers in the Mag 7. You could
cheap for a reason.
But so like you said, ChatGPT's been popular for over a year now. Really popular, right?
It's been 2 years.
2 years now, and it's no secret that it's going to eat away at Google's business and search. So maybe this is all priced in, and these dips are buyable. I just wonder how many more headlines like this, you know what I mean, and big sell-offs you'll get in the future, because I don't think this stops anytime soon.
No. I'm actually kind of curious as to why it took this long for something to come out about declining search activity. I mean, my search activity, it has to be down because my usage of AI is way up. Things I would have Googled, I now go to Perplexity for, right? So, I'm just kind of surprised it took this long for us to hear about that.
I'm staying long.
Well, we're all long Google, right? Everybody here, pretty much in some way, shape, or form. I don't own the stock, but I own the S&P, so I own the stock in that way. Everyone's long Google. That's how it'll be.
Hasn't even tested its VWAP from the cycle lows once this whole cycle. So it's been good.
What is that, out of curiosity?
The VWAP from the cycle lows could be a great stop. That's what I'm using, 140. Just below the pivot lows from last month.
I mean, like you said, we're already up. We've been going up pretty much since the close yesterday. We've gone up, right?
So good news
All night.
for the chip makers at the close yesterday too. Did you catch that? It sparked like a rally in the last 5 minutes of the session.
No, I don't know if I know what you're talking about.
Yeah, they're easing some of the.
Oh yes, it was a tariff thing. Yeah. Okay, I caught that.
So they say censor what they do say that you can't have a party without the chips. So it's always good, president's taking care of the chips.
Is it weird that the UK is not up more on this headline that we have a trade deal with them?
They're at new highs. I mean, what? Okay, so Spencer, the euro's moved in a straight line higher this year. Just broke out of a massive base. If you look at something like VGK or the Stocks 50, new cycle highs, basically coming out of gigantic bases that date all the way back to the financial crisis. What more do you want? What more do you want from these assets?
I would have thought that when you get a country-specific headline about a trade deal, then that country's market would be up more than a quarter point. That would be my assumption.
The theme of today's show is maybe it's baked in the cake. Maybe it's all just baked in the cake.
Everything is priced in. There's a really good Reddit post about this from like Wall Street Bets from like 3 years ago, right? Everything is priced in, right? You're priced in. I'm priced in. It's all priced in. Maybe.
What time is this announcement? Do you know? Does anybody know? Has there been an announcement about the time of the announcement yet?
I'm sure there's something. I just saw it on CNBC this morning when I was at the gym, but I didn't. No, I don't know what time.
A lot of scary stuff. A lot of scary stuff on CNBC this morning, talking about the robots taking over the world. You heard this?
I didn't catch that. It was mostly just a repeat of. It was just a circle of Jerome Powell and then trade deal and then Jerome Powell and then trade deal, and they went back and forth on that for like a half hour, and then I was done. So 10 a.m. Thank you, chat.
Paul Tudor Jones told everybody that at some secret meeting with rich people the other day that all of the large language models guys were saying that there's like a huge risk that 50% of humanity can be destroyed by robots.
Yeah, that's what he tweeted. Yeah, the other day that we talked about that. It's an insane take, but I don't know.
I don't know if we're talking about the right things on here. Is what I'm saying.
Maybe nothing is priced in. Crap. That's the real fear. Nothing is priced in. We don't even know. Okay. Looking at the movers, we got some movers this morning, Steve. We'll bring on Kenny in a couple minutes, but we got some, I like it when I wake up and I see stocks up or down, 20, 25, 30%. It means there's action, right? So I don't like when I come in and there's like one thing that's up like 5% and everything else is like 4, 3, 2 or flat, right? Unchanged. So we got some movers today. I like that. We got Novavax with 25%. We got Krispy Kreme down 25%. That's not great. What else? Dave, which has been on our list for a while now. Dave had like the best reaction to an earnings report like we'd ever seen.
This stock is just, I mean, what a growth story here.
And it's up another 28% this morning. God damn. What are they doing over there? What they're doing is working.
AppLovin
up 15.
Again, the quantum names, QBTS is popping. I'll bet you're getting a sympathy bid. And the others like Rigetti.
QBTS that's an earnings pop on quantum. What? I didn't know they had earnings.
Yeah, it's earnings.
I didn't know they had earnings.
Good one. Spencer's funny. Sunrun. Have you seen these solars? Solar Edge the other day, Sunrun today?
No, I have not looked at solars for a minute. Yeah, it runs up a little bit today.
Array looks interesting. I will keep trying to trade these names on the long side. Carvana had a great report. Not the best reaction. This is a name that we're used to popping 20, 30%. It doesn't have the short interest that it once did. that matters, right, Spencer? But it was a great report.
So
Like, this is a real company. Carvana is a real business. The cars are back in the Carvana towers. Coors Scientific. That's a little Bitcoin miner for you. Nice pop here. And Budweiser. Even Bud today. Everything's working out here today.
someone in chat just asked about Oscar. Oscar is a Strazza favorite. He's talked about that.
Up another 5% today.
Yeah. I mean, not everything is working, you know. You got some a lot of it's working.
Look at this. Shopify down. A rare miss. A rare reaction miss for Shopify. I'll bet it wasn't I bet they didn't miss on top and bottom line though, did they?
I don't actually know. Let's see. Unlikely, because these companies are pretty good at engineering it.
Peloton down a little bit.
I haven't read Jeff Mackey's Peloton report card yet. I will after the show. Yeah,
Arm down big.
Shopify was a bot. Oh, come on now. They missed by a penny. Big freaking whoop.
Yeah.
You know what I mean? That's basically in line as far as I'm concerned.
They're a serial beat and razor, this company. Instacart CEO resigning. The Maple Bear. Great headline here from Coinbase. Is Coinbase moving on this? So Coinbase is buying crypto options platform Deribit in a $2.9 billion deal, executives say. Being circulated at the Wall Street Jangle.
That's interesting, but you say that about Instacart. DoorDash has bought Deliveroo, the big UK one. That's interesting.
Lots going on.
Yeah.
With the ride hailing. Coinbase is hopping on this news because they love it, and it's back to bull for the cryptos. Coinbase up 5% here pre-market. Probably has a lot to do with the overnight action in crypto markets, not just this press release.
Kenny Glick, you around? Yeah, he's here. Should we dance with Kenny? Let's do a little dance, and then we'll bring on John Kolovos. How about that?
Excited for that.
Gonna be good.
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Mr. Glick.
What up, y'all? What up, kids?
What up? And he goes, how are we doing? What's going on? And I didn't see your morning note yet. If it went out, what's on your radar?
Everything. I mean, we really just we're never going to go down again, I guess, right? We got 18 months of this now, and then we'll be at all-time highs, and then we'll still be talking about whether or not it's a bear market bounce or we have to retest those lows again, or if there's going to be another shoe to drop, or you're legging into your shorts. All the mantras of the shorts, they'll just keep conjuring up these stories. So, just like the
Kenny, just you wait. You wait.
Just you wait. That's my favorite one also. Yeah.
Just you haven't seen nothing yet.
Let me tell you, friends, as a shorter, I'm still waiting. When's the end of days, right? It just doesn't come. I don't know. It doesn't come. I don't know. The sun's out again, and let's buy stocks. So, no, but seriously, yesterday was another faux show, bro, in the Qs. We broke the recent low, and we still came back. So all we're doing is testing recent lows and going higher. You know what that's called? Consolidation in a bull market. So the bull market never really left, and it never really does. So it's good to trade. I mean, yesterday was a fantastic day. Give me something, anything that gets gap down, I'm in. UPST was pretty good. TEM was pretty good. Uber was awesome. And we were talking about this last week with hostile charts, actually, the quantum stocks. Quantum stocks were hanging in there during this whole, downtrend. And once the market woke up again, quantum stocks are back. And I just noticed they even have leveraged stocks on the quantums. I mean, does every stock have a leveraged version of it now?
There's a what's the ticker? What is it?
QBTX. Right. So I'm going to petition. I got friends over at Rec Shares. I'm going to petition for 100x version of the stocks that I trade. So every penny will be actually $1. So that should be very exciting. I'm going to petition. We got friends over at Rex Shares. Come on, Rex Shares. Let's create the first 100x version of I don't know, whatever. Pick your favorite stock. This is just absurd. I mean, again, I'm a bear trapped in a bull market.
This is a 2-time long QBTS ETF.
Yes.
Oh my goodness.
Yes, it is. And I mean, if they're going to give one to qubits, we're not even sure this company's real. Speaking of not being real, GPUS. I mean, if these stocks are going to keep trading, like the name of this company makes you just want to buy it. Hyperscale Data Incorporated. Let's get on the phone and start pitching this stock to unsuspected people wearing white shirts and ties. Let's go. I mean, this market is on fire. And I did a TikTok video this morning, and I said, look, I'm going to keep my computer off. I'm going to turn it on, and within 2 minutes, I'll find winning trades. This is the greatest trading environment I have ever seen in my life, and I've lived through it all. It's crazy. What do you guys do?
I don't mind the leverage ETFs on real companies, right? On Tesla, on Nvidia, and all that, and whatever. But I draw the line at this, Kenny. I think at a leveraged QBTS product. I think that's my line. No. I don't like it. This thing is literally a week old, 2 weeks old.
Yeah.
So I didn't know about it until you just told me, but I don't like it.
Give me more. I don't know. I'm in GPUS. I mean, there's so many good stocks to trade, and I've been going back to these weird ones again because they are ripping. GPUS and kids have been pretty good. I forgot which one we had the other day. I mean, there's always 3 or 4 of these. So usually it's a distraction from the good stocks, but you know what? If these are going to rip, these are cheap stocks that are ripping in, 20% increments. These are good day trader stocks. So if you're looking for that action, man, I mean, GPUS, and we're still, and there it went. I sold it. All right, boys, I'm out. 750. All right, now it should go to 30. I mean, it's crazy. I just sold this thing at 750 just now while I was sitting here. Unbelievable action every morning, every day, throughout the day. We've had maybe 2 boring days this year. So just keep up the good work, market. This is phenomenal. But I don't know, man. It's incredible stuff. You want to talk about what we're doing on Saturday, just so we could wake some people up?
I do. I'm actually about to drop the link in the chat and throw it on screen. So what's the deal? You're going live around noon for a couple hours, and you do this pretty much like once a quarter, right?
Right. I'm going to just grab people by the throat and just show them how this trade keeps replicating. And, Nas is banging out the algo winners. So just briefly, I'll tell you what's happening. Saturday at 12 o'clock, I do this at least usually every 6 or 7 weeks. After a couple of massive days of trading, I like to say, hey, let's just gather. Let's gather when the market's off. And I'm going to show you where you should have been buying these, and the faux show bro, and the blow off tops and the rollovers. And again, even that Hims trade, the move on the upside was awesome, but the move to the downside was pretty good too. And just how to isolate it. Right now you want to be playing the faux show bro because we're in a bullish moment and it's an easier trade. But if you don't know where to look and what it looks like, you're going to be a victim to it, because it tends to victimize the trader that doesn't know what it looks like, because it looks like you're about to roll over. Then you go right back up. So we're going to spend a couple of hours going over it, where to buy, where to place your stops, and what to look for as a profit. And that's it. And then it becomes very redundant and monotonous because it really is the same trade that replicates every day. And you got your focus list. It's usually earnings and stocks that are in the news, even like GPUS. And, that's how to do it. So if you're going to try to do day trading as a living, this is it. This is the way to do it. It's a very simple procedure.
So if you're in Kenny's room, don't worry. You are already invited. You get access to the Saturday session. If you're not in Kenny's room and you want to be there, like he said, I said he does this once a quarter. He might actually do it more than that. But he does these pretty regularly at this point, maybe every couple months. And you get access to the class. You get access to the replays forever, right? So join. The link is in the chat. This QR code is on the screen. You can join, either get just the class or get the class and be in Kenny's room if that's your bag. And we'll see you there. It's going to be a good time.
Right on. And if you are free next Tuesday, there's a Grateful Dead in the park. Steve Leisman, you all know Steve. He's in a Grateful Dead cover band. And they're rocking out at Central Park between 4:30 and 7:30 for a charity event. Every year they do this. It's a great, if you like the Grateful Dead and you want to hear some free music in the park, I'll see you there May 13th, Tuesday at 4:30. All right?
Okay, now I know. A lot of the guys are going to be in New Orleans. I will not be, so maybe I will join you.
See you in the park.
See you in the park. All right,
All
Kenny.
right, guys. Good luck today.
Oh man, what a life he's got. What a life. Wakes up, rolls on over to his desk, makes a few trades, makes some coin, goes play pickleball. What a life. All right, we got John Kolovos in the house. Let's bring him out. It's been a while since we've had John on. It's been too long. How long has it been exactly? It's been since last summer since we've talked to John. So we have a lot to talk about. A lot's happened. Has a lot happened? I think so. Let's bring him out and see what's on his mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
John Kolovos, how are you, man? It has been too long. Spencer, you're right.
Uh-oh.
No. So whose fault is that? Is that his fault or your fault, Spencer?
Right now. How about now?
There he is.
There he is.
Good. I'm good, guys. I'm good. How about you guys? You guys rocking it?
Oh, yeah.
Same old over here at Stock
it.
Market TV. Is there bad echo, Spencer, or is that just me?
No, I'll take care of it.
Okay. All right. So what's new, John?
Oh, I don't know. Everything seems to be. It's interesting. I was just listening to your last segment over there. I'm very much interested to go see some Grateful Dead myself. I'm going to go check out Dead & Co. next week at the Sphere, so that'll be a lot of fun. Taking the wife there for our 20th anniversary. That's how we roll. So
have you been before? That's awesome. I'm jealous.
Yeah, we went last year. I actually took a bunch of clients last year. That was a lot of fun. So now this year I gotta bring my wife because she divorced me if I don't take her.
So cool. Enjoy it. Yeah, I got to get out there. Spencer, when are you going to the Sphere? You got to go before you have your baby.
That's not going to happen. I mean, I don't know. I was in Vegas like twice in a month a couple years ago, and I was like, I don't need to come back for a while. You know what I mean? Like, I'm good for like 10 years at this point. So I don't know. Was the answer?
Yeah, it's definitely a different beast than it was, let's say, a while ago. I mean, when my wife and I, we used to go there before we had kids, and it was fantastic. When was this? Like 08, 09, it was a recession, and they were flying you out there for free, basically like $50 round trip. So we would just do that all the time. But get in the way of that sort of stuff. So we don't.
Wait, can I just ask, as a fan, is John Mayer still with Dead & Company, or is he not?
Yeah. I think he's doing a fantastic job. I mean, and my wife loves watching him play. I play guitar, but she'd rather watch him.
Can't blame her.
Yeah.
I get it. Yeah.
All right. What are we watching here?
What are we watching? Well, I think the number one question when I talk to my clients, institutional long onlys mostly, about a third of them are hedge funds. And I think also too, just talking to us chart geeks is, trying to figure out, was that the low that we saw back in April? And what's the path out of here? And I think there's a lot of overlap between, where we are as a form of analysis, call it technicals, and even the fundamentals. There's a lot of this waiting and seeing sort of thing where we're at this spot on charts where I can easily see failure here and we come back in. But at the same time, I could very well easily see a breakaway momentum to the upside, and the overlay with that, with the macro narrative, would be, okay, tariffs, of course, right? You got a good news there, and the market could very well rip. But at the same time, how many times did JP yesterday say during the presser, we're going to wait and see how the data is before we do something? So we're at that inflection point, and I think there's a perfect overlay, like I said, between the fundamentals and what the charts are saying here.
I love how you're talking about you have to remain open-minded in times like these. Is the price action reminding you more and more of like the COVID lows in 2020?
Okay, so I think that this has been no. I think COVID was a little bit different. The path that I've been following, I've been doing a lot of work on different analogs and whatnot. I felt that in the beginning, when this started unraveling, I should go back. At the beginning of the year, my year ahead piece, I always do like an analog study. I look at all the analogs, you look at the closest analogs with the last 3 years show, and most of those analogs did pretend or forecast a not so good year for this year.
Mm-hmm.
And one of those that was tightly correlated to the end of last year to end of 24 was that of 1998. So that was on my radar. And then as the market started to accelerate lower, you'll remember back in February, we had the fastest 10-day decline almost on record. Yeah. That massive swoosh lower was a warning sign that something was happening. That immediately reminded me again that this is very much like 1998. You had a swoosh, you have a big break of the 200-day, and then you have a climactic low. So in terms of the analog, how I think this looks like, I still think this is leaning more towards a 1998 scenario versus a COVID. And the reason being is that if you overlay the idea of how this bear market started, this was a bear market, it's self-inflicted. This was not a virus. This was not something that the Fed induced. It was really just like long-term capital was self-inflicted. And the way we bottomed in 98, if you were around, unfortunately I was.
I was going to ask you to explain that because I wasn't around.
Yeah. So what happened was in the bottom, this is actually how I got into charts, was actually during long-term capital, was that they needed somebody to rescue. You needed to have like an adult in the room to say, knock it off. We got this. And that was in the form of the Fed at that point. They stepped in and they reassured markets. This time around, it was VIX hitting 50 that forced Bassett to walk into Trump's office and say, hey, look, listen, VIX at 50 is bad news. VIX at 50 doesn't happen often. It happened during COVID and during the financial crisis. You start hitting VIX at 50, the plumbing will dry up and bad things are going to happen. You need to at least chill out. And then sure enough, he starts backpedaling, starts listening to markets. And that's important. They're listening to markets. So 98 is the end. Long story short, 98 is the analog that I'm following here right now.
So does this have to end in some sort of, way that with a trade deal, or we can't just bottom and leave the whole trade headlines behind? You think there has to be some sort of resolution here?
No, I don't want to listen. I'm purely a chartist. My job is all about charting. So I don't want to say specifically it has to be off of tariffs. My sense is, again, talking to my clients, is that that's kind of already in the back burner. Yeah. They already moved past that. They're more worried about how the economic data is going to look going forward, whether or not stagflationary forces are going to come in and put a kibosh onto this, right, to create a ceiling. I think with the administration listening to the markets, I think that's why I think the floor is in. I think the bottom is in, okay? And that pullbacks will be bought over time because of how they're listening to the market. What could unravel it would be more on the fiscal side, perhaps. Reconciliation bill doesn't work out okay. Interest rates wind up spiking. You wind up spooking everybody that way. But I think we're working our way through the bottoming process. This is another way of thinking about it.
But that's interesting. What you just said, your clients have more or less moved on. They're done thinking about the tariff stuff. But if you're reading the news every day or listening to the television, it's all about tariffs.
Yeah,
it's all anybody's talking about.
Yeah. I mean, I say that, but no, they're worried about it. What they're more worried about is Trump, right? And I do believe that a good chunk of this decline that we saw in the equity market was the equity market's version of TDS, of Trump derangement syndrome. Okay, we see that in conversations we have with friends and family, whatever, and social media, etc. What I think the market did was overreact to the downside by not understanding what his policies were, kind of a thing. So they're worried about his policies going forward. What I do also worry about is that they're putting their biases, maybe their biases against him, and hindering their ability to make unbiased decisions regarding their investments.
People are losing their mind over the politics out here, John. See it every day.
Yeah, that's true.
How about interest rates? You think we'll get a couple cuts?
I don't. Probably is my sense. We'll get that, but again, that's not my wheelhouse. What I'm looking at mostly is that Yeah, the short end of the curve looks more stabilized, look like it wants to kind of go sideways for a little bit. It's the longer end of the curve that wants to push higher. And that's where I think is happening. I think the long end of the curve is going to move up over time. And the reason being is I'm not quite sure what the narrative is going to be around that. Interest rates can go up for the right reason. Interest rates can go up for the wrong reason. If they're going up for the right reasons, it would be via growth. They can also go up for the wrong reasons via maybe risk premiums because sell America sort of stuff, right? But either way, I do think the long end goes up, and I think the short end is kind of stabilized. Will they cut? Honestly, like the data isn't quite there yet. I get it, what JP was saying yesterday. I totally get it. But at the same time, I'm like, nah, it's really not my call to make. What I think is interesting here is that you look at some of the cryptos, you look at some of those, you look at Bitcoin, you look at Ethereum. What is that trying to tell us here? It's starting to outperform gold. And to me, I think that's really more of a tell of whether or not they're going to be cutting interest rates.
Do you look at that kind of price action as positive risk appetite as well?
We had a lot of conversations with even internally at my firm and even with clients, is that I do think my answer is I think Bitcoin is a risk on measure. When you look at the ratio of Bitcoin to gold, that's like an awesome measure. And I think now that replaces S&P versus gold. So old school technicians would look at the ratio of S&P to gold and say, okay, if that's rising, you're in a bull market. If it's falling, you're in a bear. But gold has been outperforming the S&P for a couple of years now, right? You would have lost a boatload of money if you had followed that indicator. I think that one is done. Okay. Now that's being replaced by Bitcoin and gold. So but the other hand of it is this. So you got to be mindful when you're a technician, you got to think more like, don't force a narrative onto stuff. I could also see a narrative where Bitcoin is a diversifier in an environment where treasuries are not giving you diversification, right? So I could also see Bitcoin go up on risk off as well. Like there's no place to go to. So I'm going to buy some Bitcoin. I'm going to sell my dollars and put it somewhere. Where I'm going to put it into some asset like Bitcoin or something like that.
I think there's at least an element of that in the recent price action. We had this big dollar flight story, right, where anything in US dollars is getting hit, and then stuff like gold and overseas equities are working, and Bitcoin was working too. I think there is an element of that already.
Yeah, and I think diversification is important because I work at an option shop, and vol has been somewhat cooperative, but now it got so high that who knows what to do with it. I think VIX gets one more shot higher as we go through some sort of retest. But when you want to find sources to kind of cushion your portfolio and whatnot, the international part is interesting. EFI, the developed index, is now at an all-time high. It had one of its fastest 18-day rallies on its record. And most of the time when those happen is near a bear market bottom. But seeing EFI break out to all-time highs, meaning all-time highs, it's finally getting above its 2008 high. It's insane how that works, right? It's the dollar-denominated index. Most of the assets that go overseas come from over here in the U.S., so U.S.-based investors are going to be more interested now to put their money to work there. And then in turn, that part of those assets should go up over time.
Do you think this is like a true shift in the primary trend or the leadership regime? It's been 10, 15 years of U.S. steady outperformance versus overseas equities. Does that finally change? And do we see the same kind of run now in favor of ex-U.S.?
That's also another tough one. The short answer is no. I mean, I still think the U.S. is the only game in town. Talked to a lot of my international clients who exclusively just do that part of the world, and they're like, they don't get it. Honestly, it's like they don't make anything but like cheese and wine over there, so they don't understand.
Wait,
why.
They don't get the international outperformance?
No, they don't. They don't get it. And really, the answer ultimately comes down to is that
oh boy.
Most of the time when you see ex-US outperformance is because the US is in a bear market. Right. It's because it's their indices are more value. They're tilted more towards value and not towards growth. So again, like tech to me is the only long-term winner, and we're the ones who supply technology to the world, right? So why would I want to push against that strength? So if I lived in Europe, so even any viewers over there, the charts are fantastic there. Your version of a 401k is fantastic. Like, you should be very, very happy over there. But for me, if I want to invest a lot of my money there, now I'll allocate some, but I still would be underweight, is what I'm getting at.
You could buy the 5 European tech stocks that exist.
That's fine. You could do that. SAP, right? What is SAP?
SAP, ASML. I don't know. I'm out.
Yeah, but SAP's fantastic chart. It is, right? Like, you have your spots to play, and even in Europe, you can look at Tokyo Electron and all that sort of stuff. But not Europe and Japan, but it's a tough one. I really have a hard time doing. Even when people say in the US you need to buy small caps, like, no, because usually small caps outperform during bear markets, and same with the average stock. So you got to be careful what you ask for.
It's a great point. So many of these ratios and these relationships that we talk about, whether it's growth value, U.S. versus world, large versus small, it's really just like, what are the big techs doing? They're the biggest piece and the highest beta.
That's what it is. Yeah. Somebody just put in Spotify, like, so in the chat. Spotify. I keep forgetting that's not a U.S. based company, and that chart is
Sweden.
Yeah.
All right. So all right. So John hates most things. Hates international. Do you like gold?
I don't hate most things. I'm very bullish on the U.S. markets. Don't get me nuts here. No. I just don't get. This is what I worry about. I used to exclusively cover into ex-U.S. markets when I was on the buy side.
Yeah.
And when I get very nervous when I hear U.S. investors get bullish on ex-U.S. because usually it doesn't pan out. Okay, I don't
know if I've ever even heard it.
That's a sign.
Right? So like when I see CNBC talk about India, I go, shh, don't talk about it. Like, just
don't want you to talk
alone.
about it.
Just leave it alone. But no, you have parts over there. No, in terms of gold. So this is interesting about gold. I'm long gold. I'm advocating clients to still be long gold, but I'm long, but with one eye open. And the reason why I'm being long with one eye open is that its trend is very much exhausted at this point. I tend to use some Elliott wave when it comes to commodities. I think they move very, very well to the Elliots. The commodities do, and they're in its fifth wave of sorts. Could be the fifth of the fifth. One count that I'm following very closely is that we're going to peak somewhere between 34 and 3,600, and that could very well be the peak for multiple years. So I'm threading that needle of wanting to be bearish on a multi-year basis on gold. Not yet. I'm still long with one eye open, but I'm very mindful of the fact that it's a very, very full count, and that the parabolic peak that it had 2 weeks ago or 3 weeks ago now, when Trump said, I'm going to fire Powell, that very well been that parabolic rally into it. And that's how commodities tend to peak. They don't do head and shoulders. They tend to do V-tops. So we'll see.
I rarely mark my charts up with parabolic trend lines, but I got one on gold right now. And it's been a hell of a run.
Oh, it's been beautiful. I mean, it's been a relatively easy chart to read. But no, so I'm long it there. I think the harder commodity to try to figure out is, what am I going to do with like copper? Like, that one broke hard during the growth scare. Hasn't really recovered. I would like to see that actually break out to the upside, and particularly get the copper gold ratio in favor of growth, basically. But it's not quite there yet.
There's a great base there. It's just got to resolve.
It does. And then oil has been, this is the thing that I talk a lot about with my clients and more of my hedge fund guys, is the gift that the market has been giving us over the last couple of years has been just being short oil and short and be underweight energy.
Right.
Is that gift going to be taken away from us now? And if you believe that oil is a proxy of economic growth and demand potentially, if the worst is behind us with some of this, you can make the argument that oil could start to base and bottom. Not there yet, but this is the sort of stuff that I'm thinking about and talking to clients with when it comes to commodities.
Well, this is how it starts, right? It's digging in, holding those lows, got a nice little momentum divergence in place. Could hook higher here.
Good. You just need to break her out, right? So yeah, oil's not that bad. Now, where do you guys do a lot of currency stuff? Where have you guys been?
We've been looking at the currencies more and more because we're talking more about these international ETFs.
Okay.
But no, this is the most we've been talking about currencies in a long time, actually, John.
Yeah, it should be. It should be. So my sense was in the beginning of the year, I do a lot of implied volatility work, and the implied vol for FX was climbing. And what that tends to mean is that that's a risk-off sentiment indicator in itself. So as FX implied vol goes up, stocks tend to underperform gold during that environment. And what I wrote about was, I think by the end of 25, that's where we are right now, I keep forgetting, is that we're going to be FX strategists by the end of this year. And just like we went financial crisis, we became credit strategists.
Right.
Equity guys were like, oh, I'm a credit guy now. I think we're going to become currency guys and gals in 25.
That's interesting.
So it's a huge important relationship here, because gold dollar has been, as for the last couple of years, like a weak dollar has been bullish for stocks, not during this downdraft. So you get that paradigm shift. A weaker dollar is actually sell America kind of a narrative for it, and then you get interest rates to kind of hold up. So that's a tricky one. I mean, I do think the dollar I think the dollar has more to go. I think the DXY gets into the 90s and stuff. It's been my call for the last couple of years. I think we have one more push lower there. And what's frightening for me is that I can't believe the euro is actually a safe haven right now for folks. The chart to me, projects to 120. We're at around 113. So that needs to abate to get a little bit more bullish towards stocks a little bit more too.
But you're seeing this volatility in currencies, not just in developed markets. I feel like every week it's another emerging market currency. Last week you see like the Taiwan dollar, big moves
Huge.
across the board.
Yeah,
And
Taiwan dollar, Indian rupee was doing it. And then what should right away? What should be the alarm bells when you see that? That should remind you of 1997, right? You have a potential for contagion to occur. So going into this week, there's one thing I was writing about is like, all right, let's see if it starts to spread or not, because that's exactly what happened then. And actually, that sowed the seeds for long-term capital a year later. So thank God so far I don't see it, but it's a reminder to folks that the currency markets are very, very much important. It's not just about AI stocks and NVIDIA.
This is a hot take, John. I like this. I didn't know you were such a big 90s guy.
I'm old man. That's when I grew up.
This makes sense.
Can I just bring it back to international for a second? John, in your opinion, is it better to just own some broad ex-US fund, or do you need to be more tactical about it? Because these broad international funds, I mean, the ones that I've had, they barely move.
I think you need to be tactical about it. I think you need to split out where you want to go. So, like, for instance, like Steve, you're like, John, you hate everything. No. Like I said, in absolute terms, they look good. If you lived over there, they look great. But if you want to peel the onion back, I do think that emerging markets, I'd rather if you had a sleeve, you had an international sleeve in your portfolio, okay, while I'm underweight ex-US, in my international sleeve, I'm overweight emerging markets. All right. So I'd rather be playing over there. I do think emerging markets where they're carving out what I would call a FIFO bottom. They were the first ones into a lot of this, and now they're the first ones coming out. So I like how that looks. I like China, of course, but Brazil has been perking up. Latin America's been perking up. The EMEA part of emerging markets, meaning like Qatar and Kuwait and Saudi Arabia, they've been real steady. Their banks there have been really, really strong. India's come back online after correcting for a while. So I'm more keen on incrementally getting involved ex-US first via EM, and then we can eventually morph into more of an EFI sort of thing. Canada's okay too, but also Canada's tied to the commodities and cyclicalness of things, right? So once we get behind this Trump stuff, this tariff stuff, Canada should, in theory, do well over time if commodities start to perk up again.
I'm with you on the emerging markets. I like Brazil too.
Yeah. It's interesting how like out of nowhere, they're like, oh, look at that. Like BAP is that one ETF you can buy, Credit Corp. Looks pretty decent. And you're kind of like, oh, wow, didn't realize this was that strong.
I appreciate that. Thanks. Because I had not done that, and I was like, what am I even doing? Why do I even own this? You know what I mean? There's no juice. So I can say I'm long international, but it's not doing anything for me. So that was my mistake. My mistake was just not being tactical about it. It was just saying, hey, I'll buy some broad ex-US fund, and then I'll be done. And then that didn't work. So,
Spencer, if you want extra juice, sometimes on our international scans, like the small cap funds will rise.
Okay.
So you have like for Brazil, you got like the EWZS. I don't know how liquid these things are. UK, I think they have like the EWUS.
Yeah.
No, that's fair. No, that's fair. Yeah, you just kind of peel it back, and if you can find any ADRs that scratch that itch, if the ETF isn't liquid, you may find believe it or not, you may find an ADR that helps you with it as well. But yeah, that's the international side of it. It's quite interesting what's going on. I've been doing a lot of work over there. Got that question a ton of times, but yeah, I don't know. I'm bullish. I don't think the secular bull market's over for U.S. stocks, so I don't know why I need to really put my money overseas yet.
How much do you dabble with the cryptos, John?
I'm not like you guys deep into it. You know, I'm primarily an equity guy, and I'll do the cryptos for my intermarket work to help triangulate my equity call. So no, I'm bullish. I actually, believe it or not, I haven't gotten JC's book, but I would tell you that I wonder if he has a chapter on Bitcoin and stuff like that, because I feel as though the last couple of years on Bitcoin, it's been almost textbook technical analysis. Like you have a top pattern, it projects your certain price, it hits it, it rallies. So you have a 61.8 retracement that it's going to get down to, it kisses it and rallies right off of it. So for me, Bitcoin has been a relatively easy chart. I'm still in camp. It gets to 130 to 150. That's the needle that I'm threading right now. But what's really, really caught my eye as of late is Ethereum. So I don't go deep into the altcoins. So like I look at Bitcoin as like the large cap, like the S&P 500, and I look at Ethereum as like the Russell too. And I look for one to confirm the other kind of thing. And Ethereum is now starting to get acceleration. So even as of this morning, it's got a nice little pop getting above its 50-day. So I do think Ethereum is carving out a bottom also within the context of a massive consolidation, multi-year consolidation. So as Bitcoin stabilizes, that makes me more encouraged about stocks. Now seeing Ethereum catching up, that confirms my view on Bitcoin, which helps me confirm my view on equities.
Love it. Yeah, so a lot of intermarket there. Our crypto guy, Louis, is so bullish Ethereum right now too. And it's funny, like the sentiment is perfect. This is still the second largest cryptocurrency in the world, but everybody hates it. It's like a joke to say bullish things about Ethereum. He's getting yelled at. I love that. No, that's good. That's what you want.
Yeah, and when did it bottom? It bottomed when stocks bottomed. So my sense is that it's this current leg will probably get you up to around 32.50-ish or so. And then you'll pull back again. But I think it's going to resolve this multi-year consolidation. So my best guess is that was the ultimate low.
Yeah,
I would press above 3,000 on it. And you're, of course, with all this stuff, you have to know where your supporters and your stops are. And I would say, I think you're buying aggressively so long as it holds 1690 is my sense.
I mean, just to get back to the upper bounds of this massive range, it's more than a double.
It would be more than a double, and you can do it right. And then what's interesting too is that I haven't really looked at the options yet on Ethereum, like the ETHE, but IBIT for Bitcoin, you've had really compelling low implied vols where call spreads look just calls or call spreads look really, really interesting there. So why you want to do that is I would almost look at it as a kicker. You're already long Bitcoin. If you want to getting an expansion higher in terms of its momentum, meaning its realized vol is going to accelerate, you can get a kicker through your call options. So it's been relatively cheap that last couple of weeks. So you can play the options as well with IBIT if you really want it.
Love that. Sean, I hope you're listening.
I don't know.
All right, John. Thanks so much, man. It's always such a pleasure.
Oh, yeah. That was fast. Thanks for having me.
Thanks, John. That was awesome.
We'll have you back sooner next time.
Have me on. Come on every day. No problem. See you guys.
All right. See you, man. That was great. Yeah.
He's one of the best. One of the best in the business. And just a great guy too.
I liked when he said that his international people didn't like when other people got bullish international, or they don't get it. They don't get what's happening right now. That's sentiment right there. I identify with that. I think we all do. When everyone else starts getting on your train, you're like, whoa, I like being alone.
There becomes a right price though for these stocks.
Yeah.
If the U.S. so it all makes sense, right? These takes of the U.S. is the only game in town. It's going to outperform forever. The companies are built differently here. The fundamentals back up that kind of an idea.
Not to mention the regulatory landscapes are vastly different.
Spent everything. Okay. So yes, the fundamentals there that they back up that story. Problem is, if you go on and on for decades at a time of the U.S. outperforming and stocks around the world just not working, there is, a right time and price for them. They start trading at, absolute trash multiples. They're in the low teens. A lot of these, some are in high single digits in terms of like price to earnings ratios. Full countries trading that cheap, and then you have America. It's like in bull markets will push 30 times. So there's a right price for this. It's just where is it, and how long does any sort of counter trend last?
I mean, if you're a value investor, you should have loved international for years at this point, right?
Yeah, and
Warren Buffett does. So
John made some great points about that, Spencer. Like, people talk about, is it ex-US versus US? Which one? Well, his point was kind of like, if it's ex-US, it might be neither, right? Or growth versus value. Is it value? Well, maybe if value's outperforming, do you really want to own any of this stuff? Right? He made the point that a lot of times when those relationships are showing outperformance from anything that's not large growth, it tends to be a bear market, right? Oh, do you want to be in small caps? Do you want to be in small caps? If they're outperforming, sometimes it doesn't mean such great things for the broader market. So it's a large cap growth world out there.
It's the world that we live in. But then the other side of that coin is that we also live in a dollar denominated world, and maybe that's changing. So I don't know. Regime changes. You never know when it's happening until it's already happened.
Regime, great word.
Word of the day, regime. All right. I don't know where Sean is. He might not be joining us today. He's not on. Is Sean out? Did Sean go somewhere? You don't know? I don't know. Sean might not even be around.
People seem to be out. People seem to be coming and going today, tomorrow, next week.
Well, programming note: Steve and I are not out, and actually we're going live this afternoon at what time? 1:00 Eastern. This stream is actually it's going to be on YouTube. It's also going to be on our site.
It's gonna be good.
I'll drop the link in the chat if you click on this link, and then we'll know who you are, and we'll send you the replay, even though it'll be on YouTube. So I'll drop it in chat. 1:00. Steve has been basically kind of crushing it with the breakout multiplier strategy. We talked about how he was buying puts. Now we're going to talk about how he knew to get long and flip the script and stop buying puts, start buying the calls. We'll talk about the volatility compression that is sort of at the core of the strategy.
We're going to talk about the best squeeze candidates right now. Market's starting to rally here today. A lot of these are popping.
If you're not in on the bull train, this might be your best time to get in, right? So 1:00, Steve and I, again, it's on YouTube. I dropped the link in the chat as well. We're going live for that. And then we also have, what day is it? Today is the 8th. Gold Rush. Jason Pers is going live with Alfonso at 2:30 Eastern time today on the channel, AAC Gold Rush Live. I'll be recording a video with Jeff Mackey, Louis Sykes doing his thing for AAC Crypto People later on this evening. We got a lot going on here. A lot going on today here on the channel. But yeah, Sean actually is out. I knew that. I forgot that JC would be out. I forgot Sean would be out.
Everybody's
the whole thing.
Yeah.
Because Sean moved his jam session to yesterday because he wouldn't be around today. So
That's right. That's right, Spencer.
I just didn't remember.
Yep.
Anyway. All right. It's 9:38. Markets are open. We're dancing. Let's get out of here. We'll see you guys at 1:00. We're going to talk about, like Steve just said, best squeeze candidates to get long right now. It's going to be fun.
All right, everybody.
Thanks for watching. Go make some money. YOLO responsibly. Adios.
Peace.
I can't take no loss. I don't even know what it costs.